Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here today. I believe my greatest fault as a day trader is my bias that I hold as a short side guy in the crude oil market. When you look at today, the day was screaming buy. And I actually had a buy in at 52.54 at 8:08 a.m. Central Standard Time. There was a good signal at 7:11 Central Standard Time around 52:38, and then a really good signal above pivot at 52:54. I got impatient with the long signal, as I normally do, looking at the short side of the market, thinking, oh, we're ready to head down. And it was one of those markets that just continued to move up and up and up. How far did it go up? Well, my spreadsheet that I have in front of me shows me that Gann believed in what's called a magic number. It's a 137.5 degree angle from a measurement that he used with this square of 9. 53.92 was that number today. How far did the market go up? 53.93. My biggest fault that I can think of when I'm trading, as well, my biggest strength is that I'm a really good short side trader. Very good. Extremely good. My bad side, and and it's kind of the pain of one over the other. When I first started trading, the only trades that I ever saw were the long side. And I was a good long side trader at the beginning of time because that's all, when you're trading the equities and the equity indexes and all that, you're pretty much buying the market and you're really not short but as you learn futures trading and you learn some of the things that you can do, you find out that, hey, the short side of the market pays off a lot more profitably when it moves your direction. It moves quicker, it moves faster, the profits come in quicker, but that doesn't necessarily mean that's the way the market's going. As I look over today, the point that tricked me, and obviously that I have to work on as a person and as a trader, was that weekly high getting busted at the 53 or 52.84 mark today. And I looked at that as the top, and I kept trying to catch that top. And the note that I put on my board, I don't know if I can show you this, but I'll throw it up there. There's my whiteboard if you want to see. I don't know if you can. You might have to zoom in or let me see if I can get it together here. Yeah, my office is kind of a mess, but hey, it is what it is right now as I'm putting things together and moving things around. But in red, written in red right there, I have stop trying fake outs in an up move. Fake outs work really good in a down move, but they hand your ass to you, your butt, your keister, as I say it to my kids in the football field, that you want to knock them on the other team on their keisters, right? Um, I really don't want to beat myself up too much. I'm in FTP right now, day one, and I decided that I wanted to give $489.44 to someone else besides me in FTP. So I tried to catch. I knew the market would eventually top out at some point during the day. I just didn't know when it was going to happen. Uh, and I didn't trust the long signal that I had. I had a 52.54 entry. The market retraced back down to entry point, and then it never looked back from that point pretty much for the rest of the morning session. And it should have been a really nice trading long side of the day. Um, the one angle that I was looking at earlier was the 45-degree angle at 53.16, and then 53.53, and then 53.92. So when I'm wrong, I find most of my losing trading days that I get really close to max daily loss are on up days and me trying to short that market in an up move and being impatient in my signals and not waiting for the market to confirm that it's done, really physically done going up. Today, as I look back at the market, when it broke through that 84 mark, I had no business being on the short side of the market at that point. Yes, there was lots of high blue bar volume that kicked in the market, but it was just short covering. It was a bull trap is what it ended up being. They pressed through it, and they just the market participants that were ready to take this market. I mean, all week long we had been fighting at the 52.36 mark, and it opened up. The session opened up at 52.82, so it was on top of the open. I find myself that as I'm not going to beat myself up anymore after I'm done with this video. I'm done. You know, I've given up the ghost as far as, you know, hey, I'm fully confident that I can get myself back into funded. I'm fully confident that if I have to go back into the combine and then come back into FTP, I just have to do what I got to do to get there. These are the learning lessons that I guess, for lack of a better way of saying it, is that, you know, having ADD and having kind of some memory loss every so often, I forget some of the things that the pain points along the way until I'm reminded of them again. You know, to know what to do on one side, and I'm a very, very, very good short side market trader. I hardly ever lose a market that is showing signs of going down when we walk into the session. Where I have to become better and continue to get better is on the long side. People ask me why I don't have a trading room, because I don't want to show you days where I just F up like this. I mean, I'm not perfect. I'm the first one to tell you I'm not perfect. I screw up. And I would hate people taking my trading signals when I had no business, no business being on the short side of the market today. I tried to catch what I call the fake outs in an up move, and I got my ass handed to me. The fake outs in a down move work. The fake outs in an up move trying to catch that short don't. I should be looking at the fake outs the other way. If I go back and say the fake out to the long side when it goes down and then getting involved in that move up, you know, that would have been a better way of handling the trading session. I got to get better at seeing that. Now, fake out to me is a very close concept that what Joe Ross talked about in his books called the TTE, Trader's Trick Entry. It's my way of being able to see what I call a fake out. Joe Ross would call Trader's Trick Entry, a TTE. So I've learned so many different things from so many different people over the years, but what I find, what used to be my strength at one time, being a long side trader only, is now my weakness. And my strength is on the short side of the market, where my weakness now is the long side when the market really wants to go up. I've got to become better at seeing. Actually, really, I got to get better at holding that long signal. If I hold at 52.54 today, worst case scenario, I come out at 53.11. That would be worst case scenario right now, because that was the target that I was hunting for, the GAN 45-degree angle. So, what woulda, shoulda, coulda, right? The WSC that I talk about, the woulda, shoulda, coulda. side of this trade should have put $500 to $600 into the account. I decided that someone else wanted this money more than I did. Yeah, I know it's just simulated, but you got to think of it as real money in that sense, because you are up against, and I'm up against that max daily loss. I mean, I took the max daily loss. I ended up with 8 trades, which is 3 too many. All one lots pretty much, except I think I had, well, they're all one lot entries until I would bring in 2. So I ended up down $489.44 on the trade session. Now, the point is, it's not real money, you know. So yeah, I know that, but that's the other side of it too. That gives me the bonus and the ability to be able to not feel the pressure when I'm trading in the market, when, you know, I've got real money on the line, or, you know, I decide that, you know, $500 isn't enough to lose in the day, and I say, you know what, I can lose more than that. I'm quite capable of losing. This is one of those days that I would keep trying to pick that top, you know, and maybe I end up down 1,000 before the market actually decides to go the direction that I was thinking. You know, eventually it's got to top out. No, it doesn't. It doesn't have to eventually top out. It could continue to move up the whole trading session. You know, my bias in the end is what causes me most of my trading losses. And I will say this, most of my trading losses, I would say, conservatively speaking, most of my day trading losses come in the market is in an up move and I'm trying to short it. And until I can conquer that in my own personal trading, why should I show you a day trading room that is like, because I'm not perfect. I'm not perfect. I never said I was. When the market's moving down, or it's got a sign of it heading down, I am probably in the 90 percentile on winning those days. And not just winning them big. But when the market is moved, I mean, the market, it moved. Just look at the 15-minute chart today, guys. When it broke out of that 84 area, it really never really looked back. It stair-stepped down a little bit just to go up. And you can see I mean, this market was screaming trader trick entries, fake outs to the long side to add contracts. And I'm trying to short in a, you know, it's the reverse of catching a falling knife in this case, right? I'm so scared against getting on in a long signal when the market's heading down. Therefore, I ended up being able to be very good at catching those shorts. But when a day like this happens, I've got to look at that and kind of flip my mind over and around. And maybe if I turn upside down like this and look at the market from the other way, no, maybe that was what I need to do. Maybe I need to stand on my head when the market's moving up so it looks like a down to me. All right, that's it. I'm done beating myself up. Have a great weekend. I figured I would, you know, I'm not perfect. You guys know it. I'm going to tell you when I'm not doing good. So today was day 1 of FTP, and I go down $489.44. All right. Hopefully Monday's better. I'm gonna, as soon as this video is over, I'm done. I'm gonna get my shower. I'm gonna drink the rest of my coffee here, and I'm gonna get ready and get set for the rest of my weekend. I've got we have a game on Sunday, our playoff game with the little kids that I coach, and hopefully I don't carry this crap into, I won't carry this crap into them. So anyway, I wrote some notes. I guess I'll put my notes up with some of the pictures that I've collected along the way, and hopefully this will remind me in the future not to do stuff that I end up, you know. And I had such a good such a good combine. I mean, I was perfect in combine, and then but I think I was perfect because the market was showing signs of being short that whole time. Now today the market finally breaks out of that area, and it just caught me. It caught me. I'm sure I'm not the only one that got caught in this move that went against you. If you're a bear side trader, then today could have been very ugly for you as well. In other words, if you were trading the short side and not being able to to flip your mind and look at the other side of the market and say, hey, and like I said, my opening trade was perfect, spot on. I was long at 52.54, and I got impatient in the long. It took me out at 54 or 55. I looked at the short side from that point forward, and so my first one is a buy, and 7 after that are all sells, and I end up going down net of minus 46 ticks today. That's pretty normal for me on a day that I'm going to lose. I'm going to have a hard time stopping at minus 30 when a lot of those days I can turn that around and go positive, but a lot of those minus 30 days in an up move, I've got to stop. I mean, when I look at that market and I look at what I can do and what I can't do, until I'm proficient at hanging on to that long signal. I mean, today could have been a really, really, really beautiful long trade. And for those that caught it, good for you. I'm glad for you. I'm happy for you. I'm glad that, you know, if you look at some of my stuff, then you'd have known that you should have never reversed your signal, considering what, you know. And I mean, little things like weekly high getting busted through. I mean, I've got to, I mean, I saw it, I knew it was there, I looked at it, I put the Fibonacci's on top of it, and when it broke through it, you know, I mean, it didn't look back. It just, you know, and sometimes the market goes up there and sails off of that mark and goes straight back down. I mean, it's the way it is. You just never know. So yeah, maybe you attempt the side of that, the short side of that weekly high, not being able to get through it, but the market will show you when it's topped out. It will. It will. Um, Unfortunately, when the market does top out and you're out of ammo, you know, but that topping out scenario, it should have been me holding that long the whole time. And literally, if you think about the 52, 54, the potential profit on the table right now, 140 ticks today. It's $1,400 on one contract. If I would have had the BALLS to hold that initial long signal and allow the market to dictate when the long is over. All right. I am, like I said, I'm very good at holding that short, not so good at holding that long. And I'll leave you at that. All right. That was, wow, I talked 17 minutes. Seems like I just start talking and it's like 4 or 5 minutes, and next thing I know, it's an 18-minute video. All right, that's it. That's all. I'm done beating myself up. You have a good weekend. I'll see you next time I decide to share something with you. Bye for now.